Welcome to Brick by Brick, where we pull back the curtain of some of Canada's most compelling private market opportunities. Quick disclaimer, this content is not intended to provide and should not be relied on for investment, tax, legal, or accounting advice. Nothing in any presentation shall be construed as a recommendation or offered to sell or solicitation of an offer to buy any securities. My name is Michael Biscoe, dealing representative of Parvis. And a little about Parvis. We are a technology-driven real estate investment platform and an exempt market dealer. We bring institutional quality real estate investment opportunities to eligible and accredited investors, making the process as simple and quick as possible. I'm very pleased to introduce to you Noah Murad of Bluestar Equities, and a firm that's redefining what it means to invest with purpose and precision, from supporting hundreds of businesses across North America to delivering a disciplined, hands-on approach. Bluestar's strategy is anything but ordinary. We'll be hearing directly from Noah Murad, managing partner at Bluestar Equity. And if you're in Calgary this September, you'll have the chance to meet him in person at our Beyond the Noise investor event. More on that at the end. Noah, welcome. Thanks for joining us.
Thank you very much. It's good to see you.
Likewise. Is so a lot to cover here, a lot of different angles, a very interesting approach, something that's very different from what I've seen over the years that I've been involved here, and very curious to maybe get a little bit of a background on what's brought you to the approach that you have here in the sphere that you guys have embraced, and maybe even just cover what a family office is and how one becomes one.
Um, okay, well, I mean, I'll start from the beginning. I think we have a pretty long history, so it's easier to start there. So, my father, Roy, he started the family business about 45 years ago now. He moved out of his house when he was a teenager. He built a business with his cousin and sold it. And the buyers were represented by Bear Stearns in New York. My family's originally from Montreal. Um, and then from there, he started to do some work while he was in university with Bear Stearns. And this was in different files that they had in merchant banking, which is what it was called back then, I guess. Um, and then over the years, he continued to work with the banks, eventually in workouts and different situations with the scheduled banks here in Canada. And fast forwarding many years, he built a management consulting and corporate finance shop, which became one of the largest in the country in terms of volume of transactions and capital being raised for businesses. And pretty much the business was helping small and medium-sized businesses grow. So, and it was all across the country and in the US. Around the late 90s, my father raised a mezzanine fund, which also became one of the largest in the country in terms of volume. And this was to invest in those businesses and support the very same clients that they were helping. So the fund was very successful. It grew to, like I said, probably top three in the highest year. The assets under management were $500 million. And this led us to 2008, the week of the financial crisis, which is when I decided to join the business. And really, at that point, the market was getting out of that sort of mezzanine lending product where you would help certain, they're more complex transactions, I guess, on the company's balance sheet. Pretty much the fund wound up, returned the money to investors. The investors in that fund made 21% after fees annually. And I was working in the corporate finance shop, which stayed ongoing. And after a few years, it was about 2013. At that point, I decided that we should approach a lot of the clients that we had and see if they wanted an equity partner. And that sort of started the family office. At the time in 2012, like you know, that time frame, there weren't, even though today you hear a lot of owners that don't have children to pass their business on to, and you're hearing a lot about this succession planning that's very like flavor of the month today. At the time, there were only a few businesses actually going out there and acquiring small and medium-sized business that was and ascribing a value to it. So there was a lot of deal flow that we had. We had a lot of clients and opportunities. So basically, from that point until today, we've stuck to a very basic strategy of buying businesses that are profitable, that have been around for a long time. We help the owners transition out of the business. Again, a lot of this stuff sounds like it's done all the time, but we've been doing it for a long time at this point. And then we grow the business through acquisition until it gets to a certain size where we can sell to a strategic or a private equity buyer. And we've done that now 15 times in the last 10 years. Including all the acquisitions we've made, we probably bought 70 different businesses at this point. And really, it's just a repeatable process. I should mention that my brother Jacob, we talk about being a family office. So my brother Jacob is a lawyer. He runs our law practices, which I'll get into in a minute. My older brother Aaron is the director of marketing for the company, and then my brother-in-law is another lawyer that works in the law firm. So we all work very closely together, and the businesses that we buy tend to be family-oriented businesses as well. So again, fast forwarding now to where we are today, we had a lot of diversified investments in various industries: construction, real estate, wholesale, logistics. We always had an investment in software or service businesses. And around 2023, 2022, we decided to focus our activities fully on service companies. We feel that that's where the market is going, and has been going for a long time. I think I read a stat that I think 75 to 80% of the businesses right now are service businesses. So we're very focused on that, and we began to acquire law firms, accounting firms, wealth management firms, and we still have the legacy corporate finance shop. So where we are today is essentially looking at each other, going, okay, well, we've got a ton of opportunities. We've got a lot of clients now coming in through all of our different businesses. Why don't we raise a fund for the first time in basically 7 to 8 years, and see if the clients are interested in participating with us in the investments, and that's sort of brought us to where we are right now.
So the deal flow is very interesting here. So you have a lot of services that you offer. You have a very large clientele base. So what I've seen is that you have an intimate knowledge of all the businesses that you're looking at prior to even, you have a long history with almost all your deal flow, which
Yeah.
is a very unique approach, right? So
Yeah.
you're either doing their accounting services or their law services. So you've got again, an intimate knowledge before you even start talking about a deal, which is, there's a depth of knowledge there that is not something that can be done quickly as a due diligence. So it's a very, very interesting approach.
Mhm.
As well as you offer a lot of services to your investors as well. Do you mind if you cover that really quickly, and
Yeah.
what that can entail?
Yeah, sure. So, I mean, starting from the top, the way our business runs at this point, which is again to the benefit of the investors, is um, we have a centralized database of all of our clients. We have an intake centrally. It's not unlike what Parvis is doing as well, where you're trying to figure out a way to get the message out to all the clients. So you have a centralized marketing department here, which my brother Aaron runs, and basically. What happens is that the clients will come into the top, and they'll need, through whatever ads we're doing or through referrals, and we'll talk to them and we'll see what do they need. And in some cases they're looking for they want to sell their business. So we will look at the business, we'll talk to them, we'll get to know them, We'll take them through a process sometimes where they want to prepare their business to be sold, and a lot of times that business owner would just as soon sell to us. And sometimes it doesn't fit with what we're doing. Actually, most of the time it doesn't fit with what we're doing, right? But pretty much anytime we make an investment, it's because we've already been working with the company for a year. Um, Currently in the fund that we're talking about, you know, our largest investment, which is in a software company that processes payments and does loyalty points and converts them to cash, which I can get into later. That business we worked on for a year and a half before we invested it through the fund. So that was already prepped and ready to go because we did a lot of the work with the management before we did that. So that's very typical of what we will do. And I'll just flip it around and say what we don't do is we don't we don't get involved in auction processes with brokers who are using numbers that don't make any sense to make the company look more profitable than it is in order to say it's worth a multiple of that profit. We just don't participate that at all. We used to. I mean, I used to do that, and you can get caught in a lot of different games about this number or that number, but then you buy the company and 3 months later a bunch of people quit and the numbers go out the window. In our case, I think from an investor standpoint, a lot of the times they're being given several different opportunities to invest in terms of real estate, businesses, whatever it is. But there's about 2 or 3 filters that it's going to before it gets to them. So really, you don't really know what's going on at the street level of the different investments. In our case, no, we know exactly what's going on because we're there with management every single day. And if you call us, we're the ones that are actually talking to the clients. So, so I think that's a really important point that from our perspective, we're not out there trying to talk to brokers and, try to bid against other buyers. We just don't really participate in that. You know?
What are some of the factors that make you move forward within a business? Are there certainly there's clearly there's market. Maybe you could just cover a couple of the deciding factors that make you pull a trigger.
Yeah, sure. And I'm going to apologize in advance because they're going to sound cliche, but they're cliche for a reason. The first thing is management, because we've had some really good ideas completely not go the way we wanted, just because the people making the decisions along with us, either couldn't execute or they thought they could. They thought we meant one thing and they thought they meant another thing, and it goes off into a different direction. So the management having a track record for a long period of time doing the same thing and they don't get other ideas, they're very stable and they're focused on their business is the number one most important thing. The second thing is the company has to have been around for a long time. We won't get involved in a company that hasn't proven that it could on its own make its way through, the ups and downs of being in business. That's a very, very important factor. And of course, the last thing is it has to be at a price that is favorable to us. I mean, we're not trying to undercut people, and we do want the deal to be good for both sides, but we won't get involved if the price is too high. I think that's a really important point. Like the price, we feel, and it's always been our philosophy that the return is made on the purchase, and so we fundamentally don't stray from that. And so it could be a really great business with all the other stuff, but they want just too high a price, and we can't do it.
Sense. Makes a lot of sense. Could you give us just a bit of a breakdown on how you deploy funds? I know that you hold cash, real estate, and then if you want to just give us a quick breakdown of what it is and why.
Sure. So the philosophy in the funds that we operate, it mimics exactly how we invest as a family. We've just always done it this way. So we're just, taking the same strategy and moving it to the fund. So we have about a quarter of the capital maintained in liquid securities or cash, right? That's just for obvious reasons. I think Warren Buffett said like cash is like air or like oxygen. So it's like you don't realize it and then you don't have it and you can't breathe. So there's that. There's 25% is in like public stock. So this is the type of thing where we're going to get more involved in like companies like Parvis, where we're in not control positions, but we could be in control positions as well, but definitely influential positions in public companies, and that have a little bit more liquidity than, let's say, a private business. And the other half is private equity. So this would include real estate. It would include the businesses I've been talking about. And so why we do it that way is because each one of those categories represents a different liquidity timing. So this allows us to have more flexibility. A real estate deal, for example, as you would know, like it takes 5 to 7 years to turn around. Yes, you can refinance the property in the middle and you can return the money back, but the actual exit still takes 5 to 7 years. And during the time while you're adding value to the property, there's very little liquidity, which is fine, but that's the quality of that. And then you have private businesses which are a little bit more liquid, but you can add value to them, especially in our case because we've already been working on them for a little bit before. You can add value to them and sell them in 2 to 3 years, which is a lot of the time what we do. And then, of course, the other end of the spectrum is the public and the securities, where you have almost a fully liquid position. So you get these different moments of different exits of liquidity that are happening within the lifetime of the fund, which gives more ability to flip the money or pay investors returns. So that's the reason why we've always done it that way.
Yeah, you covered an interest in Parvis itself. You're on the board of directors, and maybe explain the strategy of getting involved in Parvis as well.
Yeah, sure. Parvis is a very, very close to our heart in terms of what the business actually is. Our family spent a long time in this exempt market space because when we've had to raise capital in the past for issuers that retained our consulting firm, we've had to hire EMDs. And so we understand the business. And then when we saw I'll mention again, the marketing program and the technology, we thought, okay, yeah, this is right, because most people need to be able to be shown like the opportunities they even have in the first place. You contrast this with what the banks are doing, which is funneling the clients more and more into their own products, mutual funds, things that they've made. Parvis is one of the only platforms out there that's showing the whole country what's available. We also, again, going back to management, like we believe in this management team a lot. We think that they're very dedicated and they're going to be successful one way or the other. So it sort of hit all the checks for us, I guess. And we think that the business has the potential to go up 10 times probably in the next couple of years. If everybody's focused and we deliver, I think they found a product market fit, so to speak, and which is hard to do.
We kind of brushed upon it, but could you cover some of the services that would be offered to investors? There's a lot of perks in getting involved with Bluestar. You have a lot of services. You're kind of a one-stop shop to really create an efficiency for people's lives financially, and so forth. Maybe you could just cover some of the services that an investor would be able to access.
Yeah, sure. So we call this internally we call this the Bluestar Advantage. We're trying to come up with a better name, but that's what we have right now. Pretty much you have any investor that comes along in the fund is now part of our community, right? So you have access to all of our professional service firms to be able to help you with whatever you need. So for example, we have Bluestar CPA, which is an accounting firm run by Jordan Novak, who who has extensive experience both as an accountant and in the banks. So if you have, let's say, just a basic question all the way to needing an accountant, you can call him up, and he's available for you. We have obviously our law firms under KPA lawyers. So we have about you know I'd say now 30 like 30 lawyers under our group, covering all aspects of law. So this can be anywhere from family litigation all the way to corporate M&A. So if again, these are things that if they come up, an investor can contact us. The last one, which is I think the most important, is as it relates to this, is Richmond Global Wealth, which is our PMIFM and our CRO licensed firm. So basically, the way I understand it, or I like to explain it, is we have all the licenses that effectively makes us like a private bank. So we don't have day-to-day deposits. We're not a Schedule One bank, but any investor that wants to invest with a registered account, they want to put money into GICs, all the way to being able to getting their reports on exempt market transactions that they've done. They can all come from our group. So investors that come in, we've done many different things where we've packaged up services, and we've given away a ton of services, financial plans, tax planning. We've done it probably half a dozen times now since we've been involved with Parvis. Investors really like it because in addition to the returns you're making in the fund, you're also saving money on the service fees. Plus, frankly, you're getting better service. We're pretty confident that most of the cases we're going to give better service. So that's sort of the entire idea. So people who are investing with us can think about joining an overall professional service group that is also going to help them in other aspects of their life.
A massive value add. What's also good to be able to cover is that if an individual is going to use a registered fund, it's a very fast process in comparison to all other trust companies. It is almost immediate, and Bluestar graciously covers all those fees as well. So if you're in another trust company, there's no additional fees, annual fees, application fees. So that's covered by Bluestar, which is a massive benefit, as well as the how efficient the exchange of funds is. So I've been through it. It happened very quickly. It's the fastest I've ever seen, actually.
Yeah, well, you got to give credit to our partner there, Goran, who's
Yes.
Goran Kostic, who's he's very much for the clients and into making sure that they get what they need. And a lot of the time with these trust companies, you don't have somebody who's championing your needs. You're just in a queue, and they'll get to it when they get to it. In our case, no, it's very personal, the service.
Maybe we can start to cover, I think what many investors are interested in is, where are the funds going to immediately? Are they put in trust? You have clearly a massive amount of deal flow. Where is the next, let's say, $5 to $10 million slated for?
So, okay, that's an interesting way to phrase the question, because given the fact that we've got, something on the horizon, I guess, that we'd probably deploy most of that capital in. But as it relates to this fund, I'll explain to you what's in it right now, and then I'll tell you what's on the docket and what we intend to
Perfect. Yeah.
invest in. So again, I mentioned before the payment company, the software company. So we're actually in the process of an exit of that firm, which we will hopefully announce before the end of the year. The second thing is a second position is in a real estate partnership where we own essentially multi-family residential, not unlike a lot of the stuff that you'll have on the Parvis website. We have a very strong position that we got, again, as a result of the fact that the partners were already clients. So we got a very, very favorable position in that firm. The third one is Parvis. which again, everybody can look up because it's public. But again, this is a position where we've committed ongoing capital to Parvis, and then of course supporting them in all the other initiatives that they want to do. And then the last one is in our service companies. So we the investors again are going to participate in all of the service companies that we have, and from those returns. As far as the additional investments that we have at any given time, we've got a short list of probably 5 to 7 companies we could buy, and we also have our marketable securities stocks that we could invest in, take almost unlimited amounts of money. The private equity companies we would look at buying are again in the same space. We're in discussions with an HR firm that does recruiting, and also does software within the HR industry, like a SaaS model. We are in discussions with additional accounting firms, so law firms as well. I'd say that if you were to look at what the business looks like in 12 months, it looks pretty much the same, where we continue to repeat our strategy of integrating these professional firms, growing them, and then we're going to eventually have the opportunity to exit them. So that's pretty much where the capital would go. We have some real estate investments as well, but we're very selective. Especially today, we find that that there's a lot out there right now being pushed to investors, and I don't know if investors want to see another, build and develop a new multifamily thing on its own. In our case, we don't see the return profile being better than, and in terms of the risk as well, being better than what we have on the table for businesses. So I would say that the mix is going to, on the private equity side, will probably be a little bit skewed more towards operating companies.
I think that's a great time to wrap it up for this episode of Brick by Brick with Bluestar Equity. We hope you enjoyed the closer look at the strategy and portfolio. If this conversation sparked your curiosity, imagine what you'll take away in a live investor setting. Join us on September 10th for Beyond the Noise, where Bluestar will be sharing more insights live alongside other leading issuers, Legacy Investments, and KV Capital. The spots are limited, and registration will be linked in the description below. Until next time, thank you, Noah, and thank you for watching.
Thank you.